How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my personal journey to amassing $100,000 within my Vanguard brokerage account. Now, as of today, we are sitting at a brand new record high yet again, this time at $80,110.57. That is up by $1,176.55 from my last video. Of course, all due thanks to the market momentum being built by a beautiful start to earnings season. However, I do see days worth of volatility ahead, especially entering the month of November when the Federal Reserve is due to begin tapering. Be on your toes for that volatility, but nonetheless, getting into today's video, we're going to be breaking down two dominant players within the soft drink manufacturing business. And here we are, we're pitting them against one another because both of these companies have incredible investment grade ratings. One of them is a dividend aristocrat, whereas the other is a dividend king. Only one will win. Here in the red corner, we have Coca-Cola, and in the blue corner, we have Pepsi, a video you're not gonna wanna miss out on. So of course, before we dive in, go ahead, tap on that thumbs up button and help me grow the Blue Lion Finance channel. If you haven't done so already, tap on that subscribe button for me as well. I would not only love to have each and every one of you along for the ride with me, but want all of you taking advantage of the $50 One Hope Wines gift card giveaway, in which one lucky winner, the moment this channel crosses 1,000 subscribers, will be selected and sent that gift card to pick out the wine of their choice. So cheers to that. Now YouTube, with all of that out of the way, let's go ahead and get right to it. Okay, so who's ready to get started here with this dividend smackdown between Coca-Cola and Pepsi? It's most important right off the bat to get started with smashing the myth out there that Coca-Cola and Pepsi are one of the same.
Coke and Pepsi are the same thing! Wake up, people!
Twins, if you will. A lot of investors are led to believe that these two companies can literally go head to head and they are the exact same, but that is the farthest thing from the truth. And as an investor, it's most important for you to actually understand what exactly you're investing in. So of course, we're gonna get into these two companies and actually break down what makes them so different. Yes, it is true they both have iconic products and they often go head to head on the shelving marketplace. However, it's important for you to understand that their business models are drastically different, leading to two incredibly different yet remarkable results for both of these companies. But without further ado here, let's get started with Coca-Cola. That's ticker symbol KO. Coca-Cola was founded back in 1892, and even more interestingly to note is that the original Coca-Cola was founded by a pharmacist by the name of John Pemberton. And this pharmacist was looking for a medicinal solution to relieve headaches. Now go figure, the drink ultimately induces headaches when you don't get that good old Coca-Cola fix. So hey, business is business. That's all I can say is in due time, Coca-Cola established itself as the world's most dominant player, the world's largest soft drink manufacturer when it comes to concentrates, syrups, and juices. Now having over 500 brands to its name and sold in over 190 countries, with 1/3 of its revenue stemming from the United States alone. And while on the topic of revenue generation, I want to get to breaking down Coca-Cola's business model, because this is exactly where things get interesting and it differs so greatly from Pepsi. Now, of course, as a consumer, you can go into the stores, you can buy Coca-Cola's products right then and there, but Coca-Cola's primary financial strength is actually coming in from the relationships built between restaurant chains, theme parks, theaters, and sports venues. And as we all know, 2020 absolutely devastated all of those businesses, and we can see that direct hit into Coca-Cola's financials. And I'll even go a few years prior, because I want to break down the numbers and what they looked like before the pandemic and now exactly where we're at. So in 2018, you can see that Coca-Cola brought in $6.43 billion. Then in 2019, upward trajectory here to $8.92 billion. And then in 2020, they took that hit, falling to $7.75 billion, which wasn't a massive hit, but a hit nonetheless, which ultimately translated into the stock falling from $60 a share down to $40 a share, but has since then recovered. Now, I only foresee Coca-Cola continuing to grow as the world again reopens. And of course, analysts are agreeing with me, as it's coming in at a median stock share price of of $62 per share and a high stock share price of $67 per share. Now, until it gets to those prices, we can kick back and relax on Coca-Cola's dividend, and at a current dividend yield of 3.08%. Now, most importantly, Coca-Cola is our dividend king. This is a company that has been paying out dividends for over 50 consecutive years and increasing that dividend year over year. So talk about an incredibly reliable company. Coca-Cola is that company.
Coca-Cola went public in, I think it was 1919. Stock sold for $40 a share. It went back before that. It was the Candler family, and they went back. They bought it for $2,000, the whole business. A's the Candler back in the late 1880s in a couple of purchases. So now he goes public in 1919, $40 a share. 1 year later, it's selling for $19, gone down 50% in 1 year. Now you might think that's some kind of disaster, and you might think that sugar prices increased and the bottlers were rebellious and a whole bunch of things. You could always find a few reasons why that wasn't the ideal moment to buy it. Years later, you'd have seen the Great Depression, and you'd have seen World War II, and you'd seen sugar rationing, and you'd seen thermonuclear weapons, and the whole thing. There's always a reason. But in the end, if you bought one share for $40 and reinvested the dividends, it'd be worth about $5 million now. And that factor so overrides anything else. I mean, if you're right about the business, you'll make a lot of money.
Now that just about sums up Coca-Cola. So in bringing out Coca-Cola's biggest competitor, we have Pepsi, ticker symbol PEP. Pepsi was founded a year after Coca-Cola in 1893 and was originally introduced in the market as Brad's drink after its founder, Caleb Browden, who was looking for a medicinal solution to put forth in order to cure indigestion. Go figure, another flop when it comes to actually curing something, but nonetheless, the spark of a brand new, incredible company and essentially becoming Pepsi as we know it today, with products in over 200 countries and 58% of their revenue flowing in from the United States alone. Now, it's most important to note, in 1965, Pepsi acquired Frito-Lay, which gave them a huge leg up in actually becoming a massive player, both within the soft drink industry as well as the salty snack business. And now we have a player that is vastly different from Coca-Cola, simply because 53% of Pepsi's revenue generation is actually not from soft drinks, but salty snacks. That leaves 47% of their revenue generation coming in from soft drinks, again, creating a massive difference between Coca-Cola and Pepsi. But nonetheless, let's go ahead and dive into their metrics. In 2018, they brought in $12.52 billion. In 2019, $7.31 billion. And then in 2020, bringing in $7.12 billion, not too impacted by the pandemic itself. We can see that reflected in its stock share price as it went from $145 to $112 and then bounced right back up past those pre-pandemic highs to $160 per share. Now, analysts are only projecting Pepsi is going to continue to grow, coming in at a median stock share price of $168 per share and a high stock share price of $185 per share. And until it gets to those prices, we can also just kick back and relax on Pepsi's dividend. While they have not been paying out dividends as long as Coca-Cola, they are a dividend aristocrat who has been paying out dividends for over 25 consecutive years and increasing those dividends year over year. Their current dividend yield is sitting at 2.67%, which in fact now begs the question, which of these two companies is in fact the better play? And I have a twofold answer for you, because I do see Coca-Cola as a better dividend play. However, I certainly see Pepsi as a better long-term growth play. But nonetheless, I do not think you can go wrong with either or of one of these two investments. Just make sure you actually get invested into these two companies at a either fair or undervalued price, which I do not think either of them are at a fair or undervalued price as we speak right now. So if you've liked what you heard, you learned something new in today's video, make sure you go ahead, drop those comments below. I'd absolutely love to know. And of course, let me know if you're a Coke or Pepsi investor, which one you like the best. Now, by no means am I a financial advisor, so before investing in either of these two companies, do me a favor, do your own due diligence prior to doing so. And of course, help me grow this channel just tapping on that thumbs up button, and most importantly, joining me on this journey by tapping on that subscribe button. Now, YouTube, until the next video, I will see you all there.